The National Futures Association is this regulatory agency in the United States that is theoretically set up to protect the ordinary investor from making mistakes that could harm themselves or from being taken advantage of by dishonest people or traders or firms or whatnot. The problem is that when the agency becomes over-concerned, many regulations start to come out simultaneously. Regulations on leverage, regulations on hedging, regulations on account size, or all kinds of different things that could come out. And right now we are in a period of time where the National Futures Association has had 3 regulations that have a major effect. One is hedging. Many traders liked to buy and sell the same currency in the same trading account at the same time. That was a major aspect of many people's trading. Number 2, traders like to have individual stops and limits on each position. Well, the National Futures Association has taken that away as well for traders that are based in the United States. Also, traders like to trade with large amounts of leverage. In some cases, 400 to 1, 200 to 1, 100 to 1. All of these aspects of trading currency right now are under attack by that regulatory agency. And it doesn't mean that the National Futures Association is angry or dishonest or mean or terrible. But what it means is it puts a lot of pressure on many traders at the same time. That if you're successful at trading with hedging, or if you're successful at trading with stops and limits, or if you're successful at trading with leverage, all of a sudden all of those protections or benefits have been removed. And I expect that we're going to see 2 major things happen in the next 12 months. Number 1, we will see a mass exodus of trading accounts away from the United States of America. This will have a detrimental effect on brokerages, currency dealers in the United States, which, sort of ironically, actually pay fees to the National Futures Association to keep the National Futures Association in business. So by these regulations, the National Futures Association has actually reduced the amounts of fees that it will take in. And they will hurt the firms that are its own members. And number 2, you will see regulations begin to emerge that even are above and beyond what we've seen. We could see a minimum account size for day trading. We could see leverage go down to 100 to 1 for most currency pairs and 25 to 1 for exotic or the other currency pairs like the pound yen, the pound Swiss, the euro yen, and so forth. I think we'll see continued regulation, and I think we'll see many more accounts leave the United States and go overseas. And it's not because the National Futures Association is a bad agency. It's simply a consequence of an agency that is really regulating more and more based on circumstances that have been happening over the last few years.